Japan's economy, distinguished as one of the largest in the world, showcases a blend of modern efficiency and traditional practices. Renowned for its blend of cutting-edge technology and deep-rooted traditions, Japan stands as a major player in the global market. Its economic landscape, powered by leading industries like automotive and electronics, is also enriched by a robust service sector. However, challenges such as an aging population and deflationary trends add unique layers to its economic narrative. The country's economy, once a global powerhouse, the burst of an asset bubble marks the start of what's known as the lost decades. Growth slows, deflation kicks in, and Japan seems stuck. But change is on the horizon, and it's happening now. Fast forward to today, and we're witnessing something remarkable. Japan's economy, the fourth largest in the world, is stirring back to life. After years of minimal inflation, prices are climbing at the fastest rate in over 3 decades. Wages are finally catching up, rising quicker than they have since the 90s. But what's driving this sudden change? We're seeing a mix of global supply shocks and a gradual shift within Japan's institutions and workforce. This is huge because it's not just about numbers. Despite these positive signs, challenges remain. Japan's share in the global GDP has been decreasing, and some projections suggest it could fall out of the top economies in the coming decades. Until last year, Japan held the title of the world's third largest economy. However, this year it has slipped to 4th place, now ranking ahead of Germany. In the global economic arena, the pace at which a country's GDP per capita grows is a crucial indicator of its economic health and competitiveness. When examining Japan, a trend emerges that is somewhat concerning. Despite being a powerhouse in technology and innovation, Japan's GDP per capita growth has been relatively sluggish, especially when compared to its key competitors. Firstly, it's important to consider the context of Japan's economic structure. The country has long been heralded for its technological advancements and strong industrial base. However, these sectors have faced saturation and intense competition from emerging economies, which have often outpaced Japan in terms of growth and innovation. This scenario has invariably impacted Japan's economic growth rate. Moreover, Japan's demographic challenges play a significant role. With a rapidly aging population and a declining birth rate, the workforce is shrinking. This demographic shift limits economic expansion and puts a strain on productivity. Furthermore, policy inertia and regulatory challenges in Japan have also contributed to its slower GDP per capita growth. While other nations have swiftly adapted their economic policies to foster growth and innovation, Japan has often been criticized for its slow pace in implementing economic reforms. But there's a silver lining. If Japan can manage to reset its inflation expectations, boost productivity, and fuel corporate dynamism, it could maintain its position as a global economic leader. Investors are taking notice. Big names in the investment world are betting on Japan's resurgence. The Nikkei stock index is hitting highs not seen since the bubble burst. It's not just about the numbers. There's a real buzz about Japan's economic transformation. But let's not get ahead of ourselves. There have been false starts before, and skeptics point out some real concerns. The economy's recovery post-pandemic is still shaky. Wages aren't keeping up with price hikes, and the yen's value is a whole story on its own. Plus, Japan's massive government debt and an aging workforce add to the complexities. Despite these challenges, there's a sense of change in the air. We're seeing a shift in price-setting psychology, a demographic opportunity for higher wages, and geopolitical factors reshaping the corporate landscape. This isn't just about surviving, it's about thriving in a new global context. Japan's corporate world is also transforming. There's the rigid hierarchy in Japanese corporate culture. Respect for seniority is deep-rooted, but it can also stifle innovation and discourage young employees from voicing new ideas. This top-down approach often means changes happen slowly, and the fear of making mistakes can prevent risk-taking, which is essential for creativity and growth. Also, lifetime employment, once a staple of the Japanese job market, has its downsides too. It can lead to a lack of mobility and complacency, making it hard for employees to switch jobs or pursue career growth outside their current companies. And let's talk about diversity, or the lack thereof. Japanese corporate culture has been slow to embrace gender and cultural diversity in the workplace. This homogeneity can limit perspective and reduce the exchange of fresh ideas, which are crucial for any business to thrive in the global market. Governance reforms are taking root, there's a push for better corporate value, and Japanese companies are now eyeing investments with a new vigor. This is about more than just keeping up. It's about leading in sectors like semiconductors, green energy, and defense. And here's the most exciting part. A new generation of business leaders and entrepreneurs is rising in Japan. They're not just sticking to the old ways of lifetime employment and seniority-based pay. They're innovating, creating startups, and looking globally. This is where the real game changer lies in the hands of these new dynamic players in the economy. With the government's new plan to boost startup investment to 10 trillion yen by 2028 and create 100 unicorn companies, we are at the brink of a new era. Diving deeper into this plan, there are three major initiatives: developing human resources and networks for startups, enhancing funding and diversifying exit strategies, and promoting open innovation. It's a comprehensive approach aiming to position Japan as a global startup hub. Key strategies include creating startup cities, empowering universities, launching cutting-edge acceleration programs, and providing gap funding for tech startups. There's also a focus on public procurement for startups, enhancing networks, and increasing mobility of human resources. These steps signal a major shift in Japan's economic priorities. Japanese startups are no longer content with just dominating the local market. They're setting their sights globally. From microfinance to water treatment, space debris cleanup to tech innovations, these new companies are not just about business as usual. They're about solving global problems and creating a new narrative for Japan in. This new wave of entrepreneurs and leaders is also reshaping the corporate culture in Japan. They're challenging the post-war model of male-dominated, age-based hierarchies and embracing diversity and flexibility. This is a cultural shift that could redefine Japan's corporate world. So, what does all this mean for Japan? Is this time really different? There's a sense of cautious optimism. Japan stands at a significant crossroads, and the decisions made now could shape its economic future for decades to come. It's not just about recovering from past setbacks, it's about seizing the moment and rising anew. As we wrap up, it's clear that Japan's economy is at a fascinating turning point. With new challenges come new opportunities. The next few years will be crucial in determining whether Japan can redefine its economic legacy and maintain its status as a global economic powerhouse. What do you think? Is Japan on the cusp of an economic revival, or are these just fleeting signs of change?